Welcome to the North Idaho Market Watch. I'm Michio Tower, a realtor in North Idaho. My husband, Steve, and I are a husband and a wife team with extensive experience in real estate investments, including both short-term and long-term properties. We have built our dream home and helped countless others achieve their real estate aspirations. I will share the market update specifically in North Idaho.
All right, welcome to The Explainer. Today, we're digging into some really fascinating new housing data from the Idaho and Washington region. And honestly, it's telling a story that's, well, it's a tale of two completely different markets. I mean, they're unfolding at the very same time, in the very same place. So yeah, let's just dive right in.
You know, it's the age-old question in real estate, right? Is it a buyer's market or a seller's market? I mean, buyers, you're looking for those deals. Sellers, you're dreaming of those bidding wars. So when we look at this new data, which one is it? What's the verdict?
Well, the answer, and you might not believe this, is kind of both. It's a yes, it's like the market has this complete split personality, honestly. Because what this data shows is that if you're looking at a brand new construction home versus a previously owned one, you're basically in two different worlds. Okay, so let's break this down. First up, let's look at the sales trends. This is where you can really see that split I'm talking about. It's a really strange picture when you look at it. On one hand, you've got the new construction market, and it is definitely cooling off. Fewer buyers are signing those contracts. But then you look at the market for previously owned homes, and it's doing the exact opposite. It's heating up. You've got these two markets, part of the same housing ecosystem, but they're literally moving in opposite directions. And I mean, just look at these numbers. They are truly staggering. For new construction, pending sales, that's homes under contract, are down almost 15%. And closed sales, they've tanked, down almost 28%. That is a massive drop. But then you flip over to previously owned homes, and it's a total reversal. Sales are up. Pending sales, closed sales, everything. It's not just a little difference, you guys. This is a complete inversion of the market. Okay, so sales are on completely different tracks. That brings up the next logical question, what about the supply? You know, if you're a buyer out there, what are your actual options? Let's take a look at what's actually for sale. Yeah, and there's a line from the report that just sums it up perfectly. It says, new listings decreased 15.1% for new constructions homes, but increased 6.8% for previously owned homes. So you see, the pipeline of what's even becoming available is splitting right at the start. Builders are pumping the brakes while regular homeowners are putting their houses up for sale. And this right here, this shows you what that actually looks like for a buyer on the ground. The market is it's overwhelmingly dominated by previously owned homes. I mean, think about it. For every single new construction home that's for sale, there are more than 4 existing homes to choose from. That's a huge difference. The vast majority of the action, the inventory, it's all in that previously owned space. But okay, here's a little twist in the story. Even with all those different sales trends we just talked about, the total number of homes just sitting on the market, it's actually growing in both categories. The inventory of new homes is up 10% from last year, and for existing homes, it's up over 12%. So what does that tell us? It seems like no matter which side of the market you're on, homes are just lingering a bit longer than they were before. So that idea of homes lingering, it leads us right into our next big question. How long does it actually take to sell a home these days? The industry term for this, as you probably know, is days on market. Okay, get ready for this. For a new construction home, the average time from the day it's listed to the day it goes under contract is 163 days. That's more than 5 months. Just imagine the carrying costs for a builder holding on to that property for that long. Wow. And now for a previously owned home, 69 days. Now, okay, that's still over 2 months, so it's not instant, but it is less than half the time it takes to sell a new build. The speed, the velocity of these two markets, they're just worlds apart.
You see it right there, 163 days versus 69. The difference is just so stark. And you have to think about what this means for a buyer's psychology, right? In that new construction market, you've got room to breathe. You have time to think, to negotiate. But in the existing home market, you feel that pressure. You feel like you've got to act fast before it's gone. So we've talked sales, we've talked supply, we've talked speed. all of that leads to the big one. The one thing that, let's be honest, matters most to pretty much everyone, the price. So let's look at the numbers. How much are we talking?
Okay, so a new home, median price, $610,000. But that's not even the headline here. The real story is the change from last year. New home prices have shot up over 11%. Now, compare that to previously owned homes. Not only are they cheaper at about $555,000, but their prices have barely moved, up less than a single percent. So that price gap between new and used, it's not just there. It's getting wider, and it's getting wider fast. All right, so let's recap this crazy picture. For new homes, we have slower sales, but prices that are just shooting up. For used homes, we have faster sales, but prices are staying pretty stable. So, how does all of this actually shake out for affordability? Can the average family in the region actually buy a home?
Well, the best way to measure this is something called the Housing Affordability Index. The concept is actually really simple. A score of 100 means the typical family has exactly enough income to buy the typical home. So a higher number is better, means homes are more affordable. A lower number, not so good.
And when we look at the numbers, they are stark. For new construction, the index is only 54. Let that sink in. That means the typical family has just over half the income they would need to comfortably afford a brand new home. Now, for previously owned homes, the index is 62. Look, it's still a tough market, no doubt, but it's clearly more within reach than the new builds.
But you know what's even more important than the number itself? It's the direction it's heading. And this is critical. For new homes, affordability isn't just low, it's falling. It's dropped over 5% in just the last year. It is actively getting harder to buy a new home. Meanwhile, for previously owned homes, affordability has basically stayed flat. It's not getting better, sure, but at least it isn't getting worse.
So let's just boil it all down. The crucial takeaway is this. We're watching two completely different stories play out in real time. The market for new homes, it's cooling down, sales are slower, but somehow, paradoxically, it's getting way more expensive and less affordable. And at the exact same time, the market for existing homes is speeding up, sales are increasing, and prices and affordability are staying relatively stable. It's wild.
And that leaves us with one final, really important question, right? As new homes get more expensive and just further out of reach for most people, all that demand from buyers, it has to go somewhere. So is all that pressure going to funnel into the market for previously owned homes and push it to a breaking point? That is the big story to watch.